So we'll start with other model problems in this concept class. Conceptual illustrations all covered in the previous classes. So here I'll start with other models. Question number 1. The standard hours for the job X are 100 hours. The job has been completed by Amar in 60 hours, Akbar 70 hours, and Anthony in 95 hours. The bonus system applicable to the job is as follows. If the time savings being only 10%, 10% of time saved will be the bonus. If it is anywhere between 11 and 20, then 15% will be given. That's how the bonus details given here. Let's see. So we have 3 workers: Amar, Akbar, and Anthony. Amar, Akbar, Anthony. Right. Time taken being 60 hours, 70 hours, 95 hours. Time saved being 100 minus time taken will be the time saved. 40, 30, 5. Find out the time saved percentage. Time saved percentage in this case is equal to hours saved divided by standard time allowed in percentage. Standard time allowed in this case being 100, so 40 by 100, 40%, 30%, 5%. Is that clear? In this case, incentive bonus will be given based on what? Percentage of time saved to time allowed. Okay, here 40% naturally, 20% bonus will be given, and Akbar 30, then also he will get 20%, 5% savings up to 10% will be 10% of the bonus. Clear? Now, find out the salary first of all. Wages. Basic wages is nothing but time taken into hourly rate. Hourly rate being 100, so 60 into 10. 60 into 10. 6,000. 60 into 100. 6,000. 7,000. 9,500. 9,500. Now for the bonus, time saved into hourly rate multiplied by bonus percentage. Time saved being 40 into hourly rate being 100. On that 100, 20% being 800. For Akbar, time saved 30 into hourly rate 100, 3,000 into 30%, 900. Anthony case, 500 into 5%, so 500 into 10%, 50. So the total payment being 6,800. 7,900, 9,550. Now you can find out the effective hourly rate also, which is nothing but total wages payable. Divide this by time taken. 6,800 divided by time taken, in this case being 60. If I divide this by 60, 110.83 will be the answer. 106.42 will be the answer. 100.50 will be the answer. Clear? Let me see the answer may be totally different. Come on, let me know the value. 113.33 here. 112.85. The time saved to total time saved to time allowed percentage is anywhere between up to 10% will be eligible for 10% of the time saved as bonus. If it is anywhere between 11 to 20, then 15% time saved will be the bonus. If it is anywhere between 21 to 40%, 20% of the time saved will be given. So Amar saved exactly 40, so falls in this category. So he will be given bonus of 20% on the time saved. Akbar 30%, which falls under the same category. So 20% of the time saved by him will be the bonus. Anthony 5%, then savings up to 10% will be his right choice, and where his bonus will be 10% of the time saved. Clear? We have one more method of solving this illustration. So let's see here. That is nothing but slab based in case of taxation. You might have studied the progressive method, no? The same method also be adapted here. Under progressive method, here first find out the wages, basic wages. Basic wages is nothing but time taken into hourly rate. Hourly rate. There will not be any problem, that remains the same. 60 into 100, 6,000. 70 into 100, 7,000. 95 into 100, 9,500. But when is going to be calculated the bonus, it may be pretty different. In case of Amar, 40%. So time saved being 40 hours by Amar. 40 hours by Amar. Here, savings up to 10% of the time allowed, means up to 10 hours. Okay. Whatever the amount saved, in that only 10% will be the bonus. Then this value being 1000 into 10, 10 rupees. Am I right? 10 rupees. Is that okay? No, 100 rupees. 100 rupees. And thereafter, from 11 to 20, the next 10 hours, 11 to 20 means from 10 to 20 hours. For the time saved, at the rate of rupees 100 per hour, on that 15% will be payable. 15%. 150. Thereafter, from 20 to 40, another 20 hours time saved falling in this range will be eligible for 20%. Beyond that, another 60. Whatever the balance you have for the 20%, 25% incentive will be given. So here, another 20 hours is there. At the rate of 100, 2,000 into 20% will be the bonus here 400. The overall value offered as a bonus in this case being 650. Now the total wages being 6,650, total wages, and effective hourly rate being, you divide this by time taken. In this case, the time taken being 60, if I divide this by 60, 110.83 is the answer. In case of Akbar, he has saved 30 hours. Up to 10 hours into 100 rupees, 10% will be the bonus, 100 rupees. For the next 10 hours into 100 rupees, for at the rate of 15% bonus will be offered, so 150. Beyond that, from 20 to 40 is eligible for only 20% being the bonus, but he has saved only 10 here. To the extent of hours saved falling in this block, eligible at the rate of 30% will be offered. 30%. 20%. Then what's the final value? 200. The overall incentive in this case being 450. I post that here, 450. 7,450 is the overall wages, and divide that by time taken by him, 70 hours. So 106.42. 106.42. So what model can I follow in our examination, sir? This illustration solved this way, the other way, in 2 times in the CMA suggested answers itself. So there's no any hard and fast rule. You can choose one of these 2 methods. And in case of Anthony, he falls only 5%. So 5 hours only he saved into 500. On that, his incentive scheme is only 10% because he falls in the first case itself. Up to 10 hours saved, only this will be offered. Now this value being 50. So 9,550 is the total wages. See, the least efficient worker, Anthony, being the receiver, the highest salary, 9,550. The best performer, Amar, gets only 6,650 in total. But in total, it may be lesser. But effective hourly rate will be totally different. The effective hourly rate in case of Anthony is 100.50 only. So the person who works better can finish the jobs faster. So he will be usually payable lesser incentive, lesser bonus, means the salary. But because of the bonus scheme framed, effective hourly rate will be always higher. You can understand this one. In Singar Academy text, I have followed this method. The other method also possible. We'll move on to the next one. Now, the standard labor time required for the production of a certain component has been fixed at 4 hours. Standard time 4 hours. Our time allowed being 4 hours. Incentive scheme was introduced recently to raise the labor productivity. The relevant details of the scheme are as follows. Efficiency wages and incentive as a percentage of basic. If his efficiency is less than 100%, no incentive will be offered. If efficiency is 100%, means completing the units in 4 hours as per the standard time given. Above 100%, 1% additional incentive for every 1% increase in efficiency. Above 100% will be given. Fractions are excluded. What does it mean? In case if his efficiency being 101, incentive being 11% will be given. Up to 100%, 10%. For 101, 1% is higher than the standard one. For the standard, already 10% incentive is given. For the additional production, another 1% will be added. In case of 101.5%, also 11%. In case of 105%, then 15% will be offered. That's how the calculations are there. So 4 workers are there, A, B, C and D. So 4 workers. Produced 16, 12, 14 and 10 units. So units produced being 16, 12, 14 and 10 units. Is that okay? In a particular week of 48, so what is the time taken? 48. For all the 4 workers have taken the week's time, which is equal to 48. What about the time allowed, sir? For every unit, the time allowed being 4 hours. As A has produced, 16 units. For every unit requires 4 hours, means if you multiply these two, 64 hours will be the time allowed for A, 48 for B, and 56 for C, 40 for D. Now find out the efficiency level or performance rating. Performance rating is nothing but time allowed or standard time divided by time taken is the formula. 48 hours he has taken to complete a work that usually requires 64 hours. Then definitely he is a better efficient worker. So 64 by 48, what's the value you are getting? 1.33 is the performance rating. Here 48 by 48, so 100%. Here 133%. And here 100%. Here 56 by 48, 116%. Here the efficiency is lower. Okay, lesser. 40 by 48, what's the value you are getting? 80%. So what? 83%. Okay, 83%. Now what about the incentive offered? Incentive offered for 100% being 10%. Above 100%, you find out the higher performance rating beyond 100. To that number will be added with the 10. So 33 plus 10, 43% incentive. In this case, 26% is the incentive. Here, no incentive. Now find out the salary here, basic wages. Wages is nothing but time taken into hourly rate. The hourly rate given here being 150. Calculate the efficiency, incentive bonus, total earnings, total cost per unit. So all these things are going to be calculated. So total wages being time taken into hourly rate. So 150 into 48, 7,200 for B, 7,200 for all the employees. The salary will be the same. Incentive only different because they have worked for only 48 hours. Incentive being this much. So you have to multiply these two. That will be the incentive. 43% on 7,200, 1396 is the incentive, right? And here 10% on this 720 and 26% on this being 1872. No incentive here. Now find out the total wages. You have to add incentive with the basic wages. So the overall value being 10,296, 7,920, 9,072 and 7,200. Now cost per unit, labor cost per unit. So A has been given 10,296 rupees salary for producing 16 units. Then it cost us 643.5 rupees. In case of B, 7,920 for 48 units, so 660. In case of C, 9,072 divided by number of units produced by him, 14. This value being 648, the last case being 720. So the underperformer, though he gets no incentive, we think we are paying only the hourly wages, but labor cost per unit is higher due to what? Some other reasons, because the overhead and other reasons. So he has done the work much faster. Output is increasing, the labor cost per unit is naturally decreasing. That's how the management is getting motivated to offer the incentive to the employees who are working above standard. Clear? See, Hall say, row 1, apart from that, Tyler's Merrick multiple piece tree system, all these things are traditional system. Those things are the base. Now we constructed our own system. This is what about our own systems. As I already told you, you don't expect the problem just similar to find out the labor cost for the Tyler's differential piece tree system. No. They may give what could be the efficiency wages and what could be the incentive available for that efficiency wages as a statement. So you have to work out based on the statements given in the questions to solve the decision. Is that clear? All those things are again from where Tyler's differential piece, the different forms of remuneration. Clear? Make a note of it. Clear? Make it faster. Now, question number 3. The budgeted annual production of a company is 1,20,000 units. Each unit requiring 2.5 hours at an hourly wage rate of rupees 15. Okay, 15 rupees is the hourly rate. Time allowed per unit. Okay. Currently, the average efficiency of the production worker is only 60%. The management has a scheme to raise this to 75%. Currently, their performance rating is 60. They want to improve their efficiency to 75%. 15% they want to raise. The scheme involves realigning the machinery and intensive training of the production workers at a one-time cost of rupees 10 lakhs. So they do slight training as well as realigning the machinery. It involves one-time cost of rupees 10 lakhs. It's not. The scheme also proposes to raise the wage rate to 16, enlist the full cooperation of the workers. Examine the scheme, state whether it can be accepted or not. Is that okay? Now, what about the time required? What is the time allowed or time required? Time allowed, you know that. Okay. Now, what about the performance rating, sir? Performance rating is nothing but time allowed by time taken. Time allowed by time taken. What about the time taken? Time taken is equal to time allowed into performance rating. Clear? Currently, what happens, the time allowed being 2.5 hours per unit, but we need to produce 1,20,000 units. So 1,20,000 units into time allowed being 2.5 per unit. You just multiply these two. But the performance rating, sorry, time allowed divided by performance rating, right? Time allowed divided by performance rating. Sorry. So the performance rating being 0.6. 60% is otherwise 0.6. Yes, tell me. Time taken in this case being 5 lakhs hours. 5 lakhs rupees. 5 lakhs hours. And what about the wages payable into 15? What's the overall value? 75 lakhs rupees. Is that okay? This is labor cost. Now, by improving these small changes, what about the time taken? 1,20,000 into 2.5 hours required, but the performance rating earlier 60, now it is increased to 75%, so divided by 75%, 0.75. Then time taken in this case being 4 lakhs. And what about the labor cost? Labor cost in this case is you have to multiply with 16. The revised value being 16, so if you multiply this with 16, 64 lakhs. Okay, so there is a savings by 11 lakhs. Okay, but in the very first year, you need to spend another 10 lakhs rupees for the improvement. So net gain being only 1 lakh in the very first year. But second year onwards, you gain 11 lakhs, no additional cost. So only one time. This year we incorporated this cost, means all these facilities by this cost. So next year we don't spend. So 11 lakhs will be revenue you can generate from the second year onwards. So definitely we can advise to go for realigning the machine as well as train the employees to improve their performance from 60 to 75%. So anyhow, these kinds of illustrations cannot be combined with this small 4 or 5 aspects itself. You have to think in your examination, try to solve this illustration. Clear? Yes. Now, next, this one group bonus scheme is pretty rare. You have to understand sometimes group bonus scheme also. We don't calculate the efficiency of each and every individual independently, and based on the performance rating, the incentive offering is also not accepted. In case of group incentive, entire group of laborers are given a task. If that entire group performs that task in much better way, the entire group people will get the incentive. Okay. So that's what about the group bonus schemes. In a unit, 10 men work as a group. So here this 10 men are there. When the production for the group exceeds a standard output of 200 pieces per hour each man. Okay. So standard output of 200 pieces per hour. 200 units can be produced per hour. This is what about this time allowed. If they extend, or if this entire group, not independent employee, the entire group works better than this, each man is paid an incentive for the excess production in addition to his wages at hourly rate. So based on the incentive will be payable. Incentive will be payable. Okay, based on hourly rate. Whatever the basic hourly rate for the employee, okay, basic hourly rate and incentive will also be payable. Incentive per hour will be payable. Is that okay? So basic wage per hour and the incentive per hour will also be added. This is what about the revised wages of the employee. Only this incentive is available if the entire team capable of producing more than 200 units per hour. More than 200 units per hour. The incentive is at a half the percentage. The excess production over the standard bears to the standard production. Each man is paid an incentive paid at the rate of this percentage of the wage rate of rupees 2 per hour. So this is how the statement is given. Now we try to decode this statement. You block here. Incentive is at a half the percentage the excess production over the standard bears to the standard production. Incentive is at a half a percentage. When excess production over the standard bears to the standard production. Bears means it's nothing but denominator value. You find out this ratio first of all. Excess production over standard divided by standard production. In that, half the percentage will be applied. Only half, 50%. It's not half. Half of that will be considered as percentage. And what the value will be fixed? Each man is paid incentive at the rate of this percentage at the wage rate of rupees 2 per hour. So incentive being half of actual production minus standard production divided by standard production. Clear? So the numerator being excess production over the standard. Excess production means your actual production is more than the standard. If it is so in the numerator, in denominator you have to take the standard production. In that percentage, in this value, half will be the percentage of incentive offered. And this is also based on hourly rate. This percentage of the wage rate will be on 2 rupees per hour. So this is what about the incentive per hour. Incentive per hour. There is no relation between the individual workman's hourly rate and then the bonus rate. There is no individual workman's hourly rate. What does it mean? Individual workers may sometimes get around 5 rupees. Some workers may get only 4 rupees. That doesn't matter. Whenever it's all about incentive, standard incentive of rupees 2 rupees will be payable. This value will be payable per hour of working. Per hour of working. Probably this may be around 5 rupees, but this may be, if you assume this is 2 rupees, it is standard. Some employee may get 4 rupees, though they will get 4 rupees incentive per hour being only 2 rupees. The incentive per hour remains the same, irrespective of the wage rate they are falling. Okay. And in a week, the workers worked for 500 hours and the total production being 1,20,000 rupees. What is the standard time? For 500, what is the production can be possible? 500 into 200 units into 10 workers. Hours and standard output, number of employees, number of workers. What is the value? 10 lakhs. 10 lakh or 1 lakh? Number of workers being 10, sorry. How many workers are there? 10 men only, no? What about this value? 500 into 200? Okay. Hmm. This entire gang, this is not 200 units produced per hour per worker. 200 units produced per hour per group of 10 workers. Per group of 10 workers. Then this value being 1 lakh. This is standard output. What about the actual output? It is clearly stated as 1 lakh 20. Then you apply the incentive percentage here, half into actual production being 1.2 lakhs minus standard production being 1 lakh divided by standard production being 1 lakh into 2 rupees. Yes, tell me. Point 2. Yeah, this is what about the incentive. Compute the total amount of bonus for the week. Calculate the total earnings of two workers A and B of the group. A worked for 44 hours. Okay, A worked for 44 hours and basic wage rate being 2.2. A worked for 44 hours. Okay. So his salary being, how do you calculate? Basic will be calculated separately. Basic being 44 hours and his rate of wages being 2.2. What's the final value? 36.8, 96.8. And incentive being 44 hours worked and into 0.2. Huh? 8.8. So 105.6. In case of B, basic worked for 48 hours into his basic wage being 1.9, but incentive being 0.2 per hour of working. Huh? This one is 91.2. This one is 9.6. Overall value being 100.8. Let's now move on to the next illustration. Online students, come on, keep responding. both direct and indirect laborers of a department in a factory, direct labor, the work done by the direct laborer can be linked with the output. So any wages payable to the direct labor can be easily recognized as part of what? The output. The output. But some common administrative staff we have will be called as indirect labor. If the output is increasing, we can easily link this output increase is due to the direct laborer. We cannot automatically link with the indirect laborers. So what happens here? The indirect laborers are now lost to get such incentive benefits because of non-measuring ability. So in this illustration, designed in such a way, direct labor will also get the incentive. Meanwhile, indirect labor will also get some contribution from that. So we are going to discuss that illustration here. Both direct and indirect laborers of department in a factory are entitled to production bonus in accordance with the group incentive schemes. The outlines of which are as follows. So all these models, it's a puzzles like. If you go for the competitive examinations, what happens? Questions are generic and you have to apply your logics then and there and solve the illustration. The same happens here also. The questions are generic, not a pre-structured and formal illustration like. So when it's all about prepare the final accounts, the preparation of final accounts will always have the debit and credit, but we don't have the debit and credit. Read the question, understand what could be the answer expected and try to give that answer, right? Here, for any production in excess of the standard rate fixed at 12,500 tons per month of 25 days, a general incentive of 10 per ton is paid in aggregate. Okay, general incentive. So we have to understand there is a general incentive. General incentive. How much is that? Rupees 10 per hour. 10 per ton. In aggregate means may be payable for the direct as well as indirect also. The total amount payable to each separate group is determined on the basis of an assumed percentage of each of the productions being contributed by it. So this incentive will be payable 70% for the direct laborer, 10% for the inspection staff, 12% by maintenance staff and 8% by the supervisory staff. So from this it is very clear. Okay, we assume this performance is achieved due to not only direct laborer, maybe by indirect laborer also, right? So we have the arbitrary number here around 70% of the overall values for direct laborers like we have assumed. So now this 10 rupees, out of that 7 rupees due to the direct laborer, that 7 rupees will be distributed to all the direct laborers. Okay, it's a group of direct laborers. Direct laborers will have around 100 of employees. Then this 7 rupees is distributed for all 100 employees. So 70% for the direct laborer, 10% for inspection staff, 12% for maintenance staff, 8% for supervisory. Direct laborer, inspection, and maintenance and supervisory staff. Moreover, if the excess production is more than 20% above the standard, direct labor also get a special bonus of rupees 7 per ton for all production in excess of 120% of the standard. Apart from that, 7% will be payable, 7 rupees will be payable only for the direct laborer, not for the other category of employees. When the production exceeds 120%, production minus 120% of the standard. Find out the standard production for the hour. If the standard production per hour may be 100, this particular case, the actual production is 130. 30% performance rating is there. 30% excess production is there. Up to 20% leave it. Beyond 120, another 10% is no. For that, the direct laborers are taking the credit. So for them, we are offering 7 rupees. If the production is beyond 100, all the employees are eligible. If the production is above 120, for that 120 and above, no, that percentage, that value on that 7 rupees per ton will be offered only to the direct laborers, others will not get. And inspection staff is penalized 20 per ton for rejections by the customer in excess of 1% of the production. So here 20 per ton penalty for inspection staff when if the rejection is more than 1% of production. So it's their duty. You inspected and you sent the material to the customer. If we send 100 units, one unit is not as per the satisfaction of the customer, I never bother. But if 3 items are returned, say stated as rejected or damaged, then it's your incapacity. As you are being the inspection officer, you need to inspect properly before we send for the delivery. Due to that, we lose no, we will charge around 20 rupees penalty in your account. Maintenance staff is also penalized for 20 rupees per hour of breakdown. Okay. Maintenance breakdown cost. Breakdown. This will be charged only for the breakdown, means maintenance stuff. 20 rupees. 20 rupees per hour. Okay. You have to maintain the machines properly. If you don't maintain properly, then it reduces, it spoils the entire production system. If the production system spoils, then all the things remains idle. Unwantedly, company has to spend the money. From the following particulars for a month, work out the production bonus earned by each group. Actual working day being 20, production being 13,000 tons. Rejections by customers, all these informations are given here. For 12,500 tons produced, you know, this is a standard for how many days? 25 days. You now divide this by this. So roughly, how much? 500 per day, am I right? 500 per day. Then from this, for 20 days, you have to multiply with 500, means you need to produce only 10,000. 10,000. But the actual production is 13,000. Now I can calculate this from here. Okay. First one. How many units produced beyond my standard? 3,000 units produced. Okay. So who are the employees we have? Direct laborer, inspection staff, and maintenance staff, and supervisory staff. Now general incentive. Total, how much is payable? Production over the standard production 10,000, eligible for rupees 10 incentive, 30,000 incentive will be payable. 30,000 incentive will be payable. Okay. Am I right? In that 30,000 rupees, 70% is for the direct laborer, 21,000. Inspection staff will also be eligible for out of this money, which is 10%, 3,000. Maintenance staff 12%, 3,600, and support staff will get, supervisory staff will get 8%, which is 2,400. The next one is production excess of 120% of the standard, eligible for 7 rupees per unit, only for the direct laborers, others will not get. So now production being 13,000, 120% of this being 1,20,000, 12,000, on that into 7 rupees. So we expected only 12,000, but he has produced 1,000 excess. For the additional 1,000 unit, 7 rupees will be the incentive, 7,000. This will be only for whom? Only for direct laborers. Others will not get. And in case of this one, what is that? Rejection by customers. Rejection by customers in excess of 1% of the production. Okay. 1% of the production. So production being 13,000. So what is the rejection here? Penalty for rejection. Rejection minus 1% of production. Rejection being 200 minus 1% of production being 13,000. So from this it is very clear, 20% is expected. 130 is expected, but 200 happened. So 20 rupees will be the penalty on this. 70 into 20, 1400 will be a charge for the inspection staff, minus item. And in case of breakdown, hours breakdown multiplied with 20 rupees per hour. 50 hours lost into 20 rupees. 1000 rupees is only due to whom? Only due to maintenance department staff. 1400. 1000, sorry, 1000. This is the penalty. So here 1400 being the penalty. The entire penalty is charged for the inspection staff salary, as in that inspection staff salary, as well as this one also be charged only in the maintenance department staff. So direct laborers will get 28,000 as incentive. Inspection department will get only 1,600. Maintenance department will get 2,600. And the last case being 2,400. Overall value being 34,600, I think. 34,600 is incentive payable to all the 4 categories of employees. Clear? Yeah, make a note of it. Now, this question is pretty interesting. Some advanced level problems are going to be discussed here. A job can be executed either through workman A or B. A takes 32 hours to complete the job, while B finishes it in 30 hours. So, 2 workers are there, A and B. Time taken being 32 hours. Okay, time taken being 32 hours and 30 hours. The hourly wage rate is the same for both the workers. Hourly rate is same for A and B being same, but I am not aware about what is the hourly rate. In addition, worker A is entitled to receive bonus according to Halsey plan, 50%. He gets Halsey plan bonus, 50% scheme, and sharing, while B is paid bonus as per row 1 plan. He gets row 1 plan bonus. The works overhead are absorbed on the job at rupees 7.5 per laborer. Okay. Clear. Overhead, factory overhead. The factory cost of the job comes to rupees 2,600 irrespective of the workman engaged. Whoever the worker may be, whether it may be A or B, but the factory cost being the same, 2,600. Find out the hourly wage rate and cost of raw materials input. Also show cost against each element of the cost included in factory cost. What are the items will fall under factory cost? Direct material, direct labor. You'll get what? Prime cost, factory overhead. If I add the factory overhead, you'll get the factory cost. Factory cost being 2,600. Whether the work is done by A or B, the factory cost remains the same. Remains the same. Factory overhead being the time taken into 7 rupees 50 paise per hour. Time taken being 32 into 7.5. What's the value? 240. And for B, 30 into 7.5, 225. 225. Clear? Now, what about the direct labor? Direct labor for A, time taken into hourly rate plus 50 percentage of time saved into hourly rate. Okay, for time taken being 36, 36 into hourly rate, you can assume that hourly rate being X. Hourly rate being X. Clear? Now, direct material should be same. Factory overhead is higher in A's case. Then naturally what happens? Direct labor cost in B's case should be higher to compensate that. Ultimate factory cost being 2600, factory overhead in case of A is higher by 15 compared to B. This 15 could be compensated due to the savings in direct labor cost. Naturally, what happens, up to 50% of the time saved, wholesale plan is better. Okay, exactly 50%, both the scheme will give the same, exactly 50. If the time saved is more than 50%, then wholesale plan will be the better. So definitely from here, B scheme, as per the B scheme, direct labor cost is higher, means we may have time saved being less than 50%, less than 50%. Now, what is the time allowed? Do we have time allowed anyway? Standard time being 40. Then time saved being 8 hours. Come on, tell me. 8 into 50%, 4 hours. So, this is 30, sorry, 30, no, 32. 32 plus 4, 36 hourly rate. 36 hourly rate. I can assume that hourly rate is equal to X. In case of B, what happens? Time taken into hourly rate plus time taken by time allowed into time saved into hourly rate. Time taken being 30, time allowed being 40, time saved being 10. 7.5%. 7.5. This one being 30. Okay. Clear? Are you able to read this clearly? Time taken into hourly rate plus time taken by time allowed into time saved into hourly rate. The hourly rate is now replaced with what? X we supposed to calculate this one. Time taken being 30, time standard time allowed being 40, and time saved is the difference between these two, which is 10. So 30 by 7, 40 into 10, 7.5 x. This is 30x is equal to 37.5x. 37.5x. Now 37.5x minus 36x is nothing but the difference in cost. This difference only due to this one, no, 240 minus 225. Then 1.5x is equal to 15 rupees, or x is equal to 10 rupees. So now you can very easily replace here this value being 36x, otherwise 360, x 360 100, sorry, 3600. This will be 3750. Sorry, 360 only, no, 360 and 375. Okay. Now, by doing the cross reverse calculation, 2600 minus 240, 2360, 2375. And from that, direct labor is subtracted to get the direct material. That cost is same. So the savings in factory overhead is now replaced with direct labor additional cost payable to P. Clear? Now let's move on to the next question. Question number 2 is one of the comprehensive illustrations asked in CA Inter. Okay. The earlier one also CA Inter. That question was asked in CA Inter as well as CMA Inter. This question was asked in CA Inter. One of the interesting illustrations. The existing incentive scheme of Alpha Limited is as under. Normal working week of 5 days, 8 hours each, 3 late shifts of 3 hours each, day work being 160 per hour and late shift being payable at the rate of 225 per hour. Average output per operator for 49 hours week, that is including 3 late shifts, being 120. In order to increase the output and eliminate overtime, it was decided to switch on to a system payment by results. They want change new system itself. So day shift 5 days at 8 hours per day, and late shift 3 late shift in a week. Each late shift will have 3 hours. The payment being 160 here being 225. Average output per operator for 49 hours week, including 3 late shift, being 120. So hours taken being 49 and units being 120 units. This is a present scenario. Prepare a statement showing the hours worked, weekly earnings, number of articles produced, and labor cost per article for one operator under the following schemes. We'll start with the first one, which is nothing but existing time rate. Existing time rate. I'll finish up the existing time rate, which is the basic one. No, let me try to finish up that first of all. Okay. Now, existing case. What is the hours worked? 49 hours. Units produced. How many units currently produced? 120 units. What is the wages? For the first case. For the first case. Yes. 5 into 8 into 160 for the day shift. 6,400. And late shift. 3 late shift, 3 hours each, 225 as it is being the overtime. What's the value? 2025. What's the overall value? 8,425. 8,425. Now also find out standard state showing hours work, weekly earnings, number of articles produced is already taken, labor cost per article. So cost per article, cost per unit. 8,425 for 120 units, then 70.21. 70.21. This is the existing scenario. Existing scenario. Is that clear? It's a straightforward question. Straightforward question. No confusions. Apart from that, you supposed to work out these methods also. What are they? Straight piece rate system or piecework. Another one is row 1 system. Another one is Halsey plan. We have to complete these models also. This model also. Is that okay? Find out the hours worked, units produced, wages and cost per unit under other 3 more models recommended. We'll start with this one. In order to increase the output and eliminate overtime, it was decided to switch on to a system of payment by result. Payment by result. The following information is obtained. Time rate as usual 160 per hour. Basic time allowed being 15 articles for 5 hours. Okay. I'll take all this information here. Okay. This one also. See. Time rate 160 per hour. As usual, earlier also 160, the revised plan also 160. Basic time allowed for 15 articles being 5 hours. Time allowed. Okay. 5 hours for 15 articles. 1/3 or otherwise 20 minutes per unit. But when we supposed to calculate the piecework rate, very, very important. Add 20% to basic piece rate. What about the current piece rate? What is the current piece rate? If piece rate information is not given, standard hourly rate divided by standard output per hour. What is the hourly rate? 160. What is the output per hour? 1/3 hour required for every unit. Otherwise, 3 units can be manufactured. Then piece rate being 53.33. This is a piece rate. But for the piecework rate, for the straight piecework rate, okay, increased or revised piece rate for this scheme is nothing but basic piece rate what you pay 53.33 inflated by 20%. 20% bonus. If I suddenly change from one system to the other system, the employees are reluctant. Okay, if I ask you, if you don't work, you will not get any money. Then immediately workers will agitate and go for complaining. Pay me the old scheme itself. In order to motivate them, the management now planned piece rate. Earlier you earned around 53.33. Okay, I now offer another 20% extra if you are able to work better. Hereafter, I don't monitor you. You can work your own free time. I don't compel you. If you finish up working, I will be giving this much of piece wages. 20% is the additional being how much? 10.67, am I right? Then naturally 54 is the revised value. Sorry, 64 will be the revised value. Hereafter, you will be getting 64 rupees per unit. Right. Now, what happens in case of premium bonus? Premium bonus plan. Premium bonus plan is based on the time consumption. If you are reducing your time consumption to produce, you will be getting more benefit. What is the standard time? Standard time allowed, existing time. 1 by 3 per hour. Okay, 1 by 3 hour, sorry, 1 by 3 per hour per unit. While introducing the premium bonus, what are they? Premium bonuses are Halsey, Rowan, Barth. These are called the premium plan. In that case, standard time is the matter. For that purpose, whatever the standard time currently we are consuming now, we need to enhance by another 50%. So add revision. How much is that? 50%. One third, 50% being 1/6 hour per unit. Otherwise, 1/3 being how much? 20 minutes, and another half of that being 10 minutes. So naturally, what happens? Half an hour, 30 minutes. It's safer to calculate this way, minutes angle. Otherwise, half an hour. 1/3 plus 1/6 is equal to half an hour. We got this. Clear? We got the standard time as well as we got the revised piece rate also. Come on, under piece rate, assume that only 135 articles are produced in 40-hour week under straight piece, row 1 and Halsey plan above, and workers earn half the time saved under Halsey premium plan. In case of Halsey, half means 50% scheme, whether it's being the 50% or 30% or 1/3. Whatever it may be, if nothing stated, Halsey will go with 50% or any number given in the question can be followed here, right? So here 50% scheme. Now, as per these three plans, the hours worked in the week being only 40. The units produced in that week because of introducing this scheme being 135. And wages. Under piece rate system, you have to simply multiply 35 with the piece rate being 64. Okay, refer the 64. You multiply with 64. So 135 into 64, 8,640. Your cost per unit being always 864 only. 64 only. Is that clear? Hope now you'll be able to understand this one. Under row 1 system, second working row. Time taken into hourly rate into surplus. Time taken by time allowed into time saved into hourly rate. Time taken being 40, hourly rate being 160, it remains same, plus time taken being 40. What is the time allowed? Time allowed in this case is equal to units produced into time, standard time per unit, or time allowed per unit. Units produced being 135, standard time allowed per unit being half an hour. So naturally 67.5 will be the time taken, time allowed. So here time allowed being 67.5, time saved being the difference between these two, 27.5, hourly rate being 160. Come on, get me the final value. Hope it is 9,007.41. 9,007.41. And cost per unit being 9007.41 divided by 135, 66.72. 72. Third one. This is second one. In case of wholesale, so this is second one. In case of third one, wholesale model, time taken into hourly rate plus 50% of time allowed into hourly rate. Time taken 40, hourly rate being 160, 50% into time allowed being for time saved, sorry, time saved. Okay, time saved being 27.5 into hourly rate being 160. The final value in this case being 8,600 as per working note number 3. Then finally the cost per unit in this case being 63.70. Clear? Question number 3, also one of the interesting illustrations. Let me try to solve this illustration here. Z Limited is working by employing 50 skilled workers. It is considered the introduction of incentive scheme, either wholesale scheme or row-on scheme of wage payment for increasing the labor productivity to cope up with the increasing demand for the product by 40%. So what happens here, demand increases by 40%. Demand increases by 40%. So as the demand increases by 40%, what the management considered here is introducing the wholesale or row-on plan being in consideration. So introducing either wholesale or row-on plan definitely increases the productivity so that they will now match with the market's demands increase. Either wholesale or row-on. In case of wholesale, 50% bonus plan. It is believed that the proposed incentive scheme, either wholesale or row-on, could bring about an average 20% increase over the present earnings of the workers. Earnings of workers after introducing this either wholesale or row-on plan increases 20% also. If the earlier earning being 1 lakh, now they could earn 1,20,000 rupees. It could act as a sufficient incentive for them to produce more. So this will be the good incentive to produce more. Because of the assurance, the increase in productivity has been observed as revealed by the figures given below. This is a change happened. Required, calculate effective rate of earnings under wholesale and row-on. Also calculate the savings of Z Limited in terms of direct labor cost per piece. What about the labor cost per unit? Currently, after the introduction of wholesale and row-on, what could be the per unit price and what could be the savings? Advise Z Limited about the selection of the scheme to fulfill their assurance. What is their assurance? The employees will get 20% increase in their earnings. That's the assurance. So you have to choose what are the two schemes, wholesale or row-on, in order to fulfill their assurance also. Okay. Now let's try to solve the illustration here. First, let me start with what? Basic salary already fixed. Hourly rate of wages guaranteed being 30. Hourly time for producing 1 unit by one worker at the previous performance being 1.975 hours. Number of working days in the month being 24. Number of working hours per day of each worker being 8. Right. Actual production during the month being 6,120 units. Now what about the current wage? Okay. And wholesale. Time allowed is 1.975 per hour, 1.975 per unit. For 6,120 units, what is the time allowed? 12,087. What about the time taken? 24 days in a month, 8 hours per day. How many workers are there? 50 skilled workers are there. So you have to multiply this and this with 50. What is the final value? 9,600. 24 days, 8 hours, 50 numbers. 9,600. 9,600. Yes, calculate the present wage scheme. Present scheme. Present. 1.975 hours required, hourly guaranteed wage being 30. If you multiply these two, the hourly rate in this case being how much? Come on. 59.25. Okay. $59.25 per unit. What is the total wage rate? That you can multiply, but anyhow it's not asked. If I apply wholesale plan, the formula being time taken into hourly rate plus time saved into hourly rate into 50%. Okay. Time taken being 9,600, hourly rate being 30, time saved, the difference between these two is the time saved, 2,487. 2,487 into hourly rate 30 into 50%. 3,25,305. And what about the piece rate? You have to divide this by the number of pieces produced. Number of pieces produced being 6,120. 53.15. If you apply row 1 plan, time taken into hourly rate plus time taken by time allowed into hourly rate, sorry, time saved into hourly rate. Time taken being 9,600, hourly rate being 30, time taken being 9,600, time allowed here being 12,087, time saved being 2,487, hourly rate being 30. $3,47,258. What about the piece rate? Piece rate. You divide this by 6,120 units, so 56.75. Okay. So calculate the effective rate of earnings under wholesale and row 1 completed. Calculate the savings to the Z Limited in terms of direct labor cost per pieces. And what is the savings? 59.25 is the original value. Compared to this, what is the actual savings here? The difference between these two is the savings. 6.1. For the next one, 2.5. 2.5. Is that clear? Savings per unit. Now, the one more question. Advise Z Limited about the selection of the scheme to fulfill their assurance. What's their assurance? Because of this scheme, existing employees' salary will increase by 20%. Now, what's the present earnings? Present earnings 59.25 per unit for the 6,120 units production. What about the present earnings the employees getting? Two lakhs 88,000. 2,88,000. Now tell me. Now tell me. What is the change here? What is the change here? Increase in earning. In this case, 3,25,305 is the revised earning from the existing earning. From the base earning 2,88,000. What is the change? You represent that in terms of percentage. 12.95% is increasing. Old scheme, the employees are getting 2,88,000 rupees. Because of the wholesale scheme, they are getting 3,25,305. The additional earnings over 2,88,000 being 12.95%. Apply the same for the row 1 case to find out what is the increase in the earnings of the employees. 3,47,258 is the revised earnings compared to the existing earnings being 2,88,000 rupees divided by 2,88,000 over this value. Come on, tell me in percentage. This will be 20.58%. 20.58%. Clear? Now, between these two, which is the recommended one? We have given the assurance that employees will get 20% at least hike. If I adapt the wholesale, the employees are getting only 12.95%. They are not satisfied. As per our assurance, we have to apply only the row 1 method. Only then the employees will get more. So, we don't have any other options. We have to go for row 1 only as per our commitment. Though as per our commitment, we offer under row 1 plan, employees getting 20% higher income, yet company saves 2 rupees 50 paise per unit. Okay, so it's a mutual benefit for the company as well as for the employee. Clear? Shall I move on to the next one? Online students, come on, text me. Fourth question. Also, one of the interesting illustration was asked in CMA Inter. In CMA Inter, this question also be available still, I think, in their study material. I'm not sure. A company is undecided as to what kind of wage scheme should be introduced. The company has multiple wage schemes. The following particulars have been compiled in respect of 3 systems which are under consideration of the management. So, 3 workers and the details are given. For the purpose of piece rate, each minute is valued at 0.1 piece rate. Okay. Now, what about the standard time required for a piece? Multiplied with 10 paise per minute. So that will be the piece rate. So piece rate is equal to standard time multiplied with 0.1 per minute. If the standard time per piece being say 30 minutes into 0.1, 3 rupees will be the piece rate. You are required to calculate the wages of each worker under guaranteed hourly wage rate, piece work earnings basis, but guaranteed with 75% of the basic pay, and if his earnings are less than 50%. So these are the some models are given. Now we try to finish off all these things here. Okay. So in this case, 3 workers, standard time allowed per unit being this much. P can be produced by working 12 minutes. Per minute is costing 0.1 means 1 rupee 20 paise is the piece rate for P. 1 rupee 80 paise is the piece rate for Q. 3 rupees is the piece rate for R. P, Q, R, its piece rate. Its piece rate. Now wage will be payable. Wage will be payable. Guaranteed hourly rate. Okay, if we use guaranteed hourly rate, what's the wages? Hourly rate. Right. Hourly rate of wage being 6 rupees. In case of A, B, C, their total wage being actual hours worked into hourly rate. You multiply these two, that is what about the total wage. 38 into 6, 228 for A, 200 for B, 244.8 is for C. Is that clear? Guaranteed hourly rate basis. Under second model, piece work earning basis, but guaranteed with 75% of the basic pay, means guaranteed hourly rate, if these earnings are less than 50% of the basic pay. Now I am going to use the piece wage. Direct piece wage is very simple. Okay, you can simply multiply the number of units produced with the piece rate. Now the number of units produced in this case being totally different. In case of A, he produced 3 varieties of material goods, P, Q, R. How many units are produced by A? 21, 36 and 46. And piece rate for PQR being this one. So 1 rupee 20 paise, 1 rupee 80 paise and 3 rupees. If we multiply all these values, what's the final value? I think this is 25.2 rupees and this will be 64.8 rupees. This one be 138 and what is the total value? 228. In case of B, he has produced only R and this value being 25 rupees and per unit cost is 1 rupee 80 paise. What is the value you are getting? 45. In case of C, he has produced 2 units, 2 different products, P and Q. He produced 60 units of P and 135 units of Q. The piece rate being 1.2 for P and 1.8 for Q. So this value being 72. This one is 3. Okay. So this one being 3 and 75 rupees will be the value. And in this case, 60 into 1.2, 72, 135 into 1.8, come on. 243. And total value being 315. Remember that his earnings are less than 50% of the basic pay. I'll just calculate 50% of this basic pay. How much? 140 for B, 100 for C, 122.8, 122.4. This is what about the 50% of the basic wages. And these 3 workers A, B, C are guaranteed for a minimum 70%, 75% of the basic pay if their earning falls less than the 50% of the basic pay. So first case, is it so? No, sir. 114, but earning is higher. Second case, yes. His income is less than 50%. And in case of C, No, sir. So A and C are assured with their own piece wages, but in case of B, piece wages is much lower, but there's a guarantee of paying 75% of the basic pay. Then 200 rupees is the value. 70%, 75% is the basic pay being 150. Okay. Then naturally what happens? Final payment being 150, not this one. Not this one. The employee whose wages as per the piece wage falls less than 50% of the basic pay, they will be guaranteed with 75% of the basic pay. So only in case of B, his salary falls less than 50% of the basic pay. So now we are offering them 75% of the basic pay, which is 200, and that 75% being 150. 150. Is that clear? Hope you will be now able to understand the 3 points. Read again. Piece earning basis will be given, no problem, but guaranteed at 75% of the basic pay, which is nothing but equal to the guaranteed hourly rate. Whatever the guaranteed piece hourly rate is given, in that 75% is guaranteed when, if his earnings are less than 50% of the basic pay. If his earning is less than 50%, so you have to find out the 50% of the basic pay and compare with the piece rate. Whenever the piece wage is less than 50% of the basic piece rate, automatically basic piece means basic hourly wages, offer him 75% of the basic wages. So we have confirmed this. Last scenario is all about premium bonus basis, where the worker receives bonus based on row 1 scheme. You have to find out the wages under row 1 scheme. As per the row 1 scheme, what we have to do? We have to find out the standard time. So you find out the standard time or time allowed first of all. How? How do you calculate the standard time? Okay. For P, the number of time required for P being 12 minutes, Q 18 minutes, R 30 minutes. Standard time being, this one is multiplied with the number of units. 21 into 12 for A. I work out here for A. 21 into 12 minutes plus 36 into 18 minutes plus 46 into 30 minutes. You will get in minutes, but you convert into hours. Divide that entire value by 60 minutes. Come on, tell me, what is that standard time or allowed time? What is allowed time? 38 hours. Yeah, 38 hours. Similarly, calculate for B. In case of B, it's very simple. 25 into 18 minutes for B, 18 minutes. Divide that by 60. This is for B. What's the value? Huh? 7.5 hours. Okay. Oh, 30 minutes. Okay. For R, no, it's 30 minutes. Then 12.5. Okay. Then this is 12.5. Okay. For R, it is 30 minutes. So 12.5. And for C, 60 into 12 minutes. 135 into 18 minutes. Divide by 60. What's the ultimate value you are getting? 52.5. Now, Halsey plan. As per Halsey plan, the formula being time taken into hourly rate plus, which method will follow? Row 1. Okay. Time taken by time allowed into time saved into hourly rate. For A, time taken being 38, hourly rate being 6. But Standard time is 36. So 36 he has not saved any time, so he is not eligible for any incentive. The final salary for A being, you multiply these two. We don't have any incentive. Incentive being Z. Huh? Yeah. Per hour 6 rupees. Yeah, yeah. Time taken is 38 now. This one 38. Okay, okay. Anyhow, 38 also matching that. So we don't have any savings. Zero. So the salary being 228. In case of B, in case of B, 40 is the time taken in the hourly rate being for B 5 rupees. And standard time for the job is only 12 and a half. So there is no any premium for him. So the final value being 200. In case of C, time taken being 34 into hourly rate being 7.2 plus 52.5 hours is the standard, but he has completed in 34th hour itself. 18.5 will be the time savings. And for that, time taken by time allowed into hourly rate will be considered. Hourly rate here being 7.2. Yes, come on, get me the value here. 331.06. Am I right? So A, B are not eligible for incentive, but C is eligible for incentive here. Are you getting this? 331.06. Now we'll move on to the next one. A worker whose day work wages 2 rupees 50 paise on hour received production bonus under the row 1 scheme. He carried out the following work in 48-hour week. Right. So we have to follow row 1 scheme. 2 rupees 50 paise per hour. He carried out the following work. This is also one of the interesting illustration asked in the examination. Whatever the row 1 and halsey you have studied, those ideas are applied here for the calculation. This worker has completed these jobs. Job 1, 1500 items at 4 hours per 1000. Okay. Now, in 48 hours, he has done this job. Job 1, 1500 units produced in this 48 hours. This is standard time. This is standard time. 4 hours required for every 1000. This fellow has produced 1500. Then what about the standard time or time allowed for this? 6 hours. 4 for every 1000. In case of 1500, 1500 divided by 1000. So for 1000 units, 4 hours needed. For 1500, how many hours needed? You can do the cross multiplication. 1500 into 4 by 1000. So 6 hours needed for job 1. Similarly, for the job 2, 3 hours needed for every 1000, but he has completed 1800 jobs. So 3 into 1800 divided by 1000. What is the time taken here? Time allowed 5.4. Job 3, 9000 items produced where 6 hours required for every 1000. 6 hours for 1000. For 9000, 9000 divided by 6000. For every 1000, 6 hours needed. 9000 means 9 times higher number is required. This being 54. Job 4, 1500 items for which no standard time was fixed, and it was arranged that the worker would be paid a bonus of 25% only. Actual time on the job was 4 hours. Okay. So then it may be assumed to be 5 hours. For the job number 4, standard time cannot be fixed, unmeasurable, indirect. In case of indirect, we cannot measure the standard time. So whatever the time he has taken on the job for completing the job, with that 25% is added as an incentive, ad hoc manner. Okay, there is no proper manner. So 4 into 25%, 1 will be addable with the force of 4 plus 1, 5. Job 5. 2000 items at 8 hours per 1000. Each item was estimated to be half finished. Then, in this case, 8 hours needed for every 1000 units. But actual production being 2000, though the actual production is 2000, all the units are produced only 50% level. Then it may be equal to 1000 completed units, like 2 half unit is considered as 1 full unit also. For 1000 units, the standard time being 8 rupees, and actual production is also 8 hours. For actual production also be the same 1000. So the time standard time in this case being 8. Is that okay? 8 hours per 1000. 8 hours per 1000. I write here for 1000 units, 8 hours. But actual being 2000. Okay, do the cross multiplication. Anyhow, the 2000 are in the half finished stage, 0.5. So now this actual production being 2000 into half production stage is equal to 1000. For 1000 units, 8 means for the 1008 only, no. Clear? That's so you can easily understand this. Job number 2 was carried out on a machine running 90% efficiency. An extra allowance of 1/9 of the actual time was given to compensate the worker. Where the job 2 no done by worker with a outdated machine. Always complain, sir, you are giving the modern new machines to another worker. He can outperform me definitely. If you are giving the old one, how can I prove my talent? So I cannot get the salary. Immediately boss says it's not possible to replace this. If you are working with the old one, whatever the time you've taken, you know, the standard time I am giving, you know, with that standard time, I'll add another 1/9 extra for that old machine. That will be the standard time. Because of the machine's inefficiency, I give you extra time. So then you have to add 1/9 with that. So 5.4 and 1/9 on that being 0.6, I think. So then this time will be not 5.4, 6 hours. As the machine is inefficient, usual time being 5.4, I will now offer 6 hours to do that same job. Clear? 4 hours were lost due to the power cut, idle time. Calculate the earnings of the worker. Okay, now you add up all this time. $60, 66, 74, 79, 79 hours is the standard time for the completing the job. This fellow has completed in 48 hours. In that 48 hours, 4 hours were lost due to the power shutdown. This is called idle time. So effectively, you worked for only 44 hours only for the job. We have studied in standard costing. The efficiency of labor will be can be found out using what method? Actual hours worked for, not for payment. Similarly, out of 48 actual hours worked are devoted for the job is only 44. That will be taken as a means the actual time he has taken for the comparison purpose. Calculate the earnings per of the worker, clearly stating your assumptions for the treatment given you for the hours lost due to the power cut. Okay. So row 1 method is going to be followed. As per the row 1 method, time taken into hourly rate plus times taken divided by time allowed into time saved into hourly rate will be taken. Now, for the efficiency calculations, I will consider only this one. Okay. This will be cost. If it is due to the management mismanagement, then it will be debited to the costing P&L. Otherwise, it may be a part of overheads. That's how you can give the answer. And we assume that no incentive is offered for this one. For that 4 hours, normal hourly wages is paid up. Normal hourly wages 4 into 2.4, 10 rupees will be given. So the employee will demand, sir, 4 hours I came and sat for the entire 4 hours without job. I may be losing if I don't get any salary. No issue, sir. You don't work, no. So there should not be any loss. For that 4 hours normal hourly rate, whatever I usually pay, no, I'll just pay. That amount 10 rupees can be debited directly to the P&L account. Effective hours you worked for the job, it can be taken for the efficiency calculations. So this is what about the standard time or time allowed, and this is what about the time taken for your efficiency calculation. This 4 hours is completely lost. That amount paid will be considered as overhead debited to either P&L account or some general overheads. Time taken in this case being 44 into hourly rate being 2.5, and incentive is also, we assume incentive will not be payable for the last hour. Already I am also losing, so I am going to subtract that. So here time taken being 44 divided by time allowed being 79 into time saved being the difference between these two, 35 hours are, come on, 35 hours into hourly rate being 2.5. And for the idle time, I can add 10 rupees. Idle time multiplied with the hourly rate. That's how you can do. This is a standard number being 10 rupees. Now this value, come on, in book it is 2 rupees 50 paise or 250 rupees. 2 rupees 50 paise. Huh? 250 rupees. Okay, you can convert this into another 20. So the final value be 168.73. Otherwise 1,68,730. Worker is entitled to get no bonus on lost time due to power cut. Okay.